it's very important for all the insolvency professionals, and in fact, it is on the directions of IBBI itself, and they have their own observations that we are taking up these activities. And today's session is going to be part one, because the subject that we're taking up is not which can be concluded within a short period. So Ravi Prakash Ganti sir has very kindly agreed to enlighten us on the subject. The subject, you are very aware, it's about the relevance, or I should say interplay between the EPF law and EPF Act and the Gratuity Act with the Insolvency and Bankruptcy Code. I have been told to keep the introduction of Ravi sir very brief, and I will stick to that. So Ravi sir, because, I mean, the fact is that Ravi sir is known to all the insolvency professionals. So that's the reason. So sir is a senior insolvency professional and director at Resolve International Private Limited. So that's what I've been told to keep my brief introduction to. With that, I will straight away now request Ravi sir to kindly take over. Sir, over to you.
Yeah, thank you. Right. I have started screen sharing. Are you able to see it?
Yes, sir. We can see it.
Yes, sir.
Oh, thank you. Okay, so what we are, these two sessions which are planned for today as part one, and the next part two will be on 9th, 1 week from now. This is about interplay between EPF and Gratuity Acts. And 1 second. Sorry, there was some background noise which I wanted to switch off. Okay, so we will be doing this in two parts. Part one, what we will be covering is trying to understand those specific provisions of both these acts, the EPF Act and the Gratuity Act, which are relevant to us when we are carrying out any assignment under the IBC. Relevant to us as actors. And in the second session, we will be focusing on case law relating to these two matters at various levels in the judiciary, NCLT, and flat, High Court, Supreme Court, etc. And basically, what we are trying to do between these two sessions is to get a better understanding of what is the status of provident fund use and gratuity use in an IBC proceeding, CRP or liquidation. So, this session, like whenever I conduct, will be completely interactive. You can, ask a question or a clarification at any time. Just use the raise hand symbol. I will recognize you as soon as I finish whatever I am talking about. Okay. First, before we get into understanding the interpretation or trying to understand the priority or ranking of provident fund dues or gratuity dues, we need to understand what this is all about. And basically, this is about social security. In fact, out of in the new industrial code bills that have already been passed in Parliament, some of these legislations which are related to social security, they are all being covered under one particular code called the Social Security Code. So, PF and gratuity, which is what we'll be covering, of course, also is related to pension and insurance, but they are of minor importance compared to the overall two primary subjects of PF and gratuity. These fall under the basic heading of social security. And social security means providing some degree of security to the people affected who are covered under these two acts. So some of the social security related legislation in India, which is existing around that. This is not a comprehensive list, but just the important ones. I try to list it out. The first is the Minimum Wage Act. What is the minimum wage that a person should get paid for fair day's work, fair day's pay for fair day's work? The Payment of Wages Act, which covers of how payment of wages shall be made and what shall be the penalties for not paying it in time, etc. The Factories Act, which covers safety aspects of industrial health and safety in relation to people working in a factory environment. The Payment of Bonus Act, which deals with bonus, statutory bonus payable to employees who are covered under it, and all those issues relating to that. And then, of course, the last two, so the two which we are going to deal with, the EPF and NPF, which is Employee Provident Fund and Miscellaneous Provisions Act, and the Payment of Gratuity. Okay. Some definitions we will cover, not all of them, because there is, each act itself is pretty vast in terms of not only number of provisions which it has, but also the sphere of influence that it has. We are not, as IPs, necessarily required to know everything about each of these acts.
Raviji, so I'm sorry, I'm interrupting you in between. Your presentation, can you make it full screen?
You are not able to see it?
It's very small. And your voice is also not clear. Mode, actually. Your voice is also not very clear.
Voice is also not clear. Okay.
And the screen should be full screen.
I will do it. I will do it. One second.
At the extreme top left hand.
Better?
Yeah, much better, much better.
Okay. Yeah, I just changed it to slideshow mode.
But your voice is breaking, sir. Your voice is breaking.
Voice is breaking. I think that's the internet issue, but let me see if I can do something about it. Hold on. One second.
Hello. Hello, can you hear me now?
Now yes, much better. Much better.
Yeah. Okay.
Answer full screen.
Yeah, I will do that. I will do that. Okay, so some important definitions. Authorized officer, just to know what wherever in the act the term of authorized officer is used, it could mean the Central Provident Fund Commissioner or any of the other Provident Fund Commissioners, additional, deputy, regional, etc., or anybody else authorized by the government. Now, fund. A fund here, wherever the word fund is used in this act, it means the Provident Fund established under a scheme. Now, this word scheme is important because the act, as we will see, authorizes the central government to come out with a Provident Fund scheme. And scheme means the EPF scheme framed under Section 5. Now, the word fund, Provident Fund and fund, has been used different times, sometimes with a capital F and sometimes with a small f. They do have slightly different meanings. So we will come to that when we are actually covering. Employer. Now, this is a definition which all of us as IPs need to know, that what is the meaning of employer under the PF Act. It does not mean the company. In the PF Act, the employer has been defined to be an individual only. Okay. So if it's a factory, it is the owner or occupier. Owner or occupier as defined in the Factories Act. And if it is some establishment other than a factory, then whoever has the authority and has been entrusted with it, with the ultimate control over the affairs of the establishment. Now, obviously, this would include manager, managing director, managing agent, people with such designations. They all come under the category of employer. In normal course, one would say, who is the employer? I mean, it will be, okay, the company is the employer. Yes, in general parlance, that is true. But under the PF Act, wherever the word employer is used throughout the Act, it means a specific individual. And then we need to remember, okay, that in the PF Act, employer refers to individual. And also, I would like to draw your attention to the words, who has the authority or been entrusted with the ultimate control over the affairs of the establishment. Entrusted with how is not defined. The EPF scheme. What is the Employees Provident Fund scheme? Now, scheme is different from the Act. Okay, the Employees Provident Fund Act empowers under Section 5 the government to come out with the scheme. So the scheme is something similar to what we have rules. So it is a specific thing which provides various provisions. We will come to the EPF scheme, some of the important provisions. So the central government has already notified this, obviously, immediately after the Act came into being. Now, I was telling you that the word fund has been used in two different contexts, one with a capital F, otherwise with a small f. So you will find that, if you read this, for the establishment of provident funds, and at a later stage, there shall be established as soon as maybe after the framing of the scheme, a fund with a capital F. Now, what this means is that the PF Act actually provides for two classes of funds or two categories. One, which is established by the central government, which is under the EPFO, the Employees Provident Fund Organization, which is the central fund which is applicable throughout the country. There is another which is private fund, or what is called as an exempted fund. Now, these funds are those where the employers have, and in this case, employer means the companies or the establishments, have been allowed specifically to set up and manage their own fund. When I say the word own fund, it doesn't mean that it is part of the assets or the control of the company or the establishment, but set up by them. It has to be set up in the form of a trust, all that, those rules are there. But certain establishments, even today in the country, continue to have provident funds which are not part of the main fund, which is the central government fund. Okay, they are separate, they are exempted. They have to largely follow the same pattern of investment of funds, operation of the fund, etc. And a few more actually, stringent norms are there. But otherwise, broadly, the two really do the same function. That is to take care of the money deposited into the fund for the benefit of the members. 5.1a, the fund with the capital F, which is the EPFO fund, to be administered by the central board, which is the board of trustees, what we call as the board of trustees of the EPFO. And whenever in general, when we talk of Provident Fund Commissioner, Regional Provident Fund Commissioner, whatever, we are always talking of this fund with the capital F. Okay. Purely procedural, central board, which shall be set up. It's got its rules, how many members, all that. Not really important for us. We don't need to know, but it has a board of trustees who shall administer the fund. And as I said, the private fund or the exempted fund also has to follow very similar method of structure and organization and administration. Now we come to the important parts, those which are relevant to us, and that's all dealing with the contributions. Now section 6 determines how much shall be the contribution. And this keeps getting amended sometimes from time to time, but today, as of today, it is either 10 or 12, depending on type of establishment. So either 10% or 12%, depending on what is applicable to that particular establishment. Of what? Now that is defined in the section itself, that basic DA retaining allowance. Now, retaining allowance is again defined in the Act. We will not get into that because most of the time this is actually not even there in most establishments today. And it covers employees directly employed by the establishment and also those which are employed through a contractor who is working for the establishment. So it covers both. And the employee's contribution shall be equal to the contribution payable by the employer. Now, this is the minimum. The Act in the same provision also allows an employee voluntarily to want to contribute more. But whenever an employee, for example, says, okay, up to 15% I am willing to actually contribute to the fund, though my minimum deduction is 12, the employer is not bound to match it. So the employer's contribution statutorily will be only whatever 10 or 12 as applicable to that. This Act deals with three actually schemes: the EPF scheme, which is the Provident Fund scheme itself, the pension scheme, and the insurance scheme, EDLI, what they call Employees Deposit Linked Insurance Scheme. We will concentrate during these two sessions only on the PF scheme because that is really the major part of it. The other two relatively minor in terms of their impact. But they are all covered under the same Act and the same set of rules. Now, how is the money due from an employer to be determined? And what happens if there is a dispute? Who decides? All right. So how much is payable exactly? What is should be included in the wages to arrive at how to deduct it? What should not be included? Now, these rules are changing. What is there in the EPF Act and the new Social Security Code bill has slightly different rules as far as these are concerned. But those are matters of procedure. Today, we are only concentrating on the substantive aspects of it. So it is the Provident Fund Commissioners, the CPFC or RPFC, depending on who is the one authorized and in charge of that, to decide any dispute as regard the applicability of the Act, whether it is applicable to an establishment or not, in all those criteria. Nowadays, it is applicable to almost all except those which are below 20 in number of employees. And also to decide any other dispute, including how much amount of money is payable by the employer under any of the provisions, which means the contribution of the employee, the contribution of the employer, damages levied as a penalty, interest for delayed payment, all of that, administration charges when it comes to pension fund, etc. Now, what will be payable by each employer is the dispute settling authority are the commissioners. Now, when a dispute like this happens, this is interesting. The officer who is deciding the dispute, the regional commissioner or the assistant commissioner, he has been vested with the powers of a civil court. Not all the powers, but those which are related to inquiry and investigation, including, the power to summon witnesses, force the attendance of people, etc., producing of records. This needs to be kept in mind that when somebody gets a summons under this provision of the Act, then that person is acting like a court, like a civil court. Any question till now? Okay.
Sir, can they issue the summons to RP also? Because now the RP is in charge and the company in the liquidation.
Yes, important, because the question that you are asking is actually applicable in all aspects of this Act or any other Act for that matter. The RP is acting as the management, which means the RP is the establishment is under the control, supervision and authority of the RP, which means that RP is now the employer and an employer can be summoned. Okay, now see, when we look at the broader aspect of what The immunity to an RP, the immunity is only to the extent of action against the RP. Not that, it is against everything. The RP is not, let us say, the governor or a president of India. I mean, he's not a constitutional position that can never be summoned, cannot be questioned, cannot be talked to. No. The RP is got immunity only with respect to actions taken in good faith. Haji, Meji.
Yes, sir. I have a small practical problem.
Haji.
For a factory, when the renewal of license is due, since there is no board resolution, we could not give. I gave an COC resolution. Then director of the company is not willing to sign acceptance letter for position of occupier. And then the authority says, unless you give these two documents, we are not able to renew, because under the Factories Act, there is no change. And there is no, mention of IBC or immunity from IBC under the Factories Act. So they say we do not, we know IBC is an act where you have been appointed and you have taken the power, but there is no change in Factories Act saying that, okay, if RP is there, RP can act as occupier and they can sign. So that is the problem coming, and which I feel there should be some amendment in Factories Act, like in income tax, we become a signatory. In ROC, we become a signatory when we are RP.
Yeah, fair enough. Okay. Okay, one thing, let us try to understand this in a broader perspective. There are quite a few lawyers in this session today. I'm sure they will support me in this, that no law can take into account and put down in writing every possible circumstance, situation, whatever will arise in future. The laws are to talk of the major aspects, not every aspect. So rest will have to be by way of reasonable interpretation. That means an interpretation which a reasonable person would do under normal circumstances. Now, what is an RP? The RP is now actually the board, because all the powers which are vested in the board of directors are vested in the RP. Number one, only the powers. Now, when it comes to the occupier under the Factories Act, if I recall correctly, the occupier has to be a director. Necessarily. Okay. It was not so earlier, but then many years ago it got amended because people were appointing some of the lowest position people in the in the position of occupier, so that the directors and all the senior people would get away scot-free. Now that is no longer there. The occupier has to be a director. Now the RP is not a director, but has the powers of the board of directors, which means that RP can designate somebody as the occupier, because the board designates who shall be the occupier. Right? It is the board of directors which decides so-and-so director shall be the occupier for this factory. So that power of the board has now come to the RP. So if there is a director on the board who is fulfilling other criteria which are required to fulfill that of occupier, then that director does not have the right to say no, because see, becoming an occupier is not a voluntary job. It's a statutory requirement. So whomsoever the board designates to be the occupier has to become the occupier, otherwise has to leave the board effectively. Okay, there are within the act itself and by case law, they have said certain people cannot become occupier, like part-time directors, independent directors. Obviously, they are exempted from being. But anybody else, I would say that that is the way you have to do. And if somebody says or doesn't agree, then anything related to IBC and its interpretation and implementation, we have only one forum, NCLT. So get a direction from the NCLT. But this is my interpretation, that the RP cannot become the occupier because the RP is not a director, but RP having the powers can designate a existing director who fulfills the criteria to become the occupier.
I agree, sir. My suggestion was only like in during CRP, RP is a authorized signatory to income tax returns or income tax purposes. for similarly for MCA purposes. What I mean to say, can we have some proposal to amend under Factories Act also during CRP? If directors do not agree, let RP
you are confusing two issues. One is who can sign the form. Another is who will do the job. They are two different things altogether. As far as income tax, etc. is concerned, they have authorized the RP to sign that. Okay. But here you are talking of who will become the occupier and who will decide who the occupier shall be. They are two different things. Okay.
Correct. Correct.
So who will become the occupier? The Factories Act requires only certain specified people who can become the occupier. So the RP doesn't fit into that. So RP cannot become, but RP having the power of the board, and the board is the one interested to decide who the occupier shall be. So the RP can decide, yes, you are so and so shall be the occupier. Now, usually it should be the same person who was there till yesterday, prior to renewal, unless of course that person has left the services of the company, in which case whoever is left. But if nobody is there, okay, suppose it can happen, right? People resign, don't go away. I mean, you don't have a person who qualifies as an occupier under the Factories Act, then you will have to take an exemption, basically. That till the resolution plan is done or whatever, you will be exempted from fulfilling this compliance. And that exemption only NCLT can give.
Right. That is what I wanted to know. Yes, that is true. Then we'll have to go to NCLT, wait for 6 months, 8 months, we do not know. So that is why I was suggesting
No.
we can have some.
Yeah. Maheshanji, you are talking of 6-8 months. There are people waiting in jail for 20 years when their maximum sentence was 2 years. Okay.
I know.
Let's not even compare.
So, agree, sir. That is what I am saying. If we can have some exemption in the
First of all, we can't.
Like we say,
but I will tell you what I tried to tell you is that इस हर चीज कानून में लिखा नहीं जाता. It is not.
सर मैं बोल रहा हूँ कि जो एग्जाम्पशन हम एनसीएलटी से लेने जा रहे हैं वही चीज यदि एक्ट में दे दे कि सपोज देयर इज नो
अरे यार जी फिर महेश जी आप वही बात कर रहे हैं कि हर चीज एक्ट में लिखना चाहिए तो फिर आदमी किस लिए चाहिए और फिर क्वालिफाइड आरपी किस लिए चाहिए. वो तो फिर कोई भी क्लर्क कर लेगा काम क्योंकि जो लिखा है वही फॉलो करना है. So and understand the broader aspect. Okay, let's close this at this stage. Okay. Yeah.
Thank you.
Yes. Next one, provision 7Q. 7Q would be familiar to all of us who have handled any assignment, because one of the claims that the Provident Fund organization makes on us is interest under 7Q. Okay, 7Q interest. Now, what is this? Simple interest rate of 12% that's given, or such higher rate as may be specified in the scheme. And this from the date on which amount has become due till the date of its actual payment. Nothing, no rocket science here. I think we are very clear as to what it is. So this is a claim for interest for delayed payment. There is one more item of claim. Okay, so there are basically four types of claims, which a PF department, when it makes a claim, usually does. One is the employer contribution, then the employee's contribution, which is deducted but not paid, then interest, and then there is one more, which we will come to. It has got a big sounding name, but yeah, that will come later. That is under 14B. Now, how is the money recovered, and what are the penalties or coercive measures available in the PF Act against an employer who has not remitted the amount due to the fund on the due date or within the extended time? So there is this provision to have a recovery officer. Okay, the authorized officer, who is the commissioner, recovery officers are also set up under the Act itself, will ask the recovery officer by issuing a certificate, go and recover this much amount from this so and so establishment. So what are the powers of the recovery officer? This is the recovery officer who has the power to issue an order of attachment. on movable or immovable property of the establishment. That's fine up to that, or as the case may be, the employer. Okay. So ध्यान में रखिए, park that word employer there. It has a potential impact. May not have happened till now, but it has. The recovery officer also has the power to arrest the employer. This is not really used much, but that doesn't mean it can't be used. The power is there, it may be used. So something which we need to remember, that the recovery officer can arrest the employer and detain that person in prison following whatever is the due process of law. Now, attachment of what? First, against the properties of the establishment. That means whatever is the factory or company or whatever establishment is there, it could be a shop, it could be an office, wherever the dues are. So the property of the establishment to be attached first. And where such attachment and sale is insufficient, that means the value of such property is not adequate to cover all the dues that have been claimed for the entire amount, such proceeding against the property of the employer. Now, these are highly, what do you call, for want of a better word, I would say dangerous provisions, provisions with wide-ranging power inherent in that. They have not much been used much in India, not to that extent that what the law allows them to do. But because the fact that it is there in the statute, it means if it is used, it cannot be held to be illegal because the power is there in the act itself. Now, the authorized officer can issue a certificate under this subsection. That means certificate for attachment or for any other mode of recovery of attachment of the property of the establishment and or the employer, as the case may be, notwithstanding that some other method of recovery is also being attempted parallel. So we will see what those other methods of recovery are.
Sir, one small question here.
Aji,
if property is already secured to the bankers, then the position changes, or how it is?
Okay, that we will come to that, because that's a very broader question you're asking, that when there are multiple encumbrances on a property, which are the result of provisions of different statutes or different actions or powers given under the statute, depending on how they happen, how are they to be treated? That's a whole chapter when one can do multiple PhDs on that. But ranking and priority of charges and mortgages and attachments and encumbrances and liens and pledges, all that. But we will cover that. We will cover that if possible today, otherwise definitely in the next session, because there it is more relevant. We'll be talking of section 53, where does this rank, all those things will be covered then too. Now, what are the other modes of recovery? Now, this is interesting. The PF Act empowers the Provident Fund commissioners and the recovery officers to use the power of garnishee, okay, which means that some other party which owes money to the establishment or the employer for something else, it could be a customer, who owes money to the company. Now, the PF Act can issue an order to that person saying, you will not pay the employer, you will pay me because so much amount is due towards the Provident Fund against this. Now, that power is available with the PF authorities. It could be current dues. Okay, if you read 8F 2 and 3, they're very confusing. They seem to sort of have the same language and probably the same meaning. But I think one is talking of dues which are there today and another which might happen in future, which means some payments, let us say, payable to the employer establishment by some third party by way of any means whatsoever. It could be receivables against sales. It could be money due against, let us say, a a property which might have been sold earlier. It could just be even dividends and things like that, periodic payments coming from some investment. Any and all of them. A garnishee order can be issued against that under these provisions. Now, there are very few acts which give such wide powers to authorities to recover. Now, you raise the question of charge and priority. To some extent, this provision covers that in the sense it talks of any claim respecting any property. Now, any claim means any type of claim on any property in relation to which a notice has already been issued. The recovery officer has set attachment order on the particular property. So any claim which arises after the date of that such a notice shall be void, which means that claim will be of no consequence whatsoever. So anybody transacting with that property after that certain date might not even be able to recover that either way. Okay. So all claims relating to that will become void, which means that the moment a PF attachment order comes, now that no type of alienation, encumbrance, lien, etc., or any such thing can be created on that particular property as long as the attachment remains in force, which is different from, let us say, charge of a bank on, let's say, working capital stocks, inventories, etc. Now, because they are subject to floating charge, they are in the ordinary course of business. The company can transact in those goods, keep selling them and producing new goods, raw materials, etc., all of them. But if there is a PF attachment on inventories, movable assets, for example, then that cannot even be sold. Now, this is a coercive provision on the third party who owes money to the employer or the establishment and has not followed or fulfilled the requirement on a notice sent to him by the PF authority for a garnishee type of order. That person then becomes personally liable to the commissioner, which means that the PF authorities can proceed against that person in such person's individual capacity also, besides the corporate capacity or whatever, depending on who it is. Because any person who, like the provision 10 says, fails to make payment shall be deemed to be an employer in default. That means everything, all the provisions which are available, or the recourse that is available against an employer in default shall also now be available against such a person. And in the same manner, 8B to 8E, which we have already seen. Now, protection against attachment, this is not the attachment of the assets of the employer. This is the attachment of the money in the fund or the money to the credit of the fund. So all the amounts standing to the credit of any member in the fund, they cannot be attached, assigned, charged under any proceeding whatsoever, which may by no court, civil or criminal, can actually take action but to recover or to in any way alienate the amount standing to the credit of a member in the fund, the provident fund. And this is applicable for both types of fund, that is the government fund, the fund set up by the government, or also exempted funds. And as you will notice, neither the officer assignee appointed under now they are dealing with the Insolvency Acts too. So even the receiver or the assignee appointed under those acts cannot touch that amount. A similar provision is what has come under IBC with slightly different wordings, but we will come to that at a later stage. So basically, what it means that irrespective of whatever happens, whatever be the situation, the money available or the money due to a member from the provident fund is sacrosanct. It cannot be touched by anybody. And why? The reason is there in the word itself, that provident, it is to provide for the person after his person's retirement or whatsoever, also to provide for the family of that person. And that's why this provident fund has been kept at such a high level in terms of the protection that is available to it from all types of alienation, attachment, recovery, etc. PF cannot be touched. That's, I mean, in few words, you can say that. Similar, the same amount, if the person dies, it goes to the legal heirs, and again, even then, it cannot be touched by any court under any proceeding whatsoever. Any questions? Now, priority of payment of contribution is section 11.
Ravi,
Haji, bolo.
Probably I might have missed out. Just wanted to understand whether the IP is considered to be an employer.
Okay. You want me to go back to that provision or just tell you straight away?
Yeah, just tell me. I'll read it.
So the employer has been described as a person who is in the ultimate control of the affairs of the establishment. Whatever be the designation, it could be manager, it could be managing director, it could be any other, or just somebody said you are the boss. That means whoever is in charge. Now, employer under this PF Act is always an individual, not the body corporate. So the PF Act has very clearly said wherever the word employer is used, it will be an individual who is in control. Now the RP obviously comes and steps into the shoes of whoever is the current management and assumes all control. Now that is very clearly written in the IBC itself, that RP substitutes the entire board and control and custody and everything comes to the RP. So would an RP then step into the shoes of employer as defined under the PF Act? My interpretation is yes, because there is no other alternative option that I can think of. Who else will be there? Somebody has to be the employer. Whoever is in control is the employer. So if this so and so is now in control automatically, because see, let's not get into the protection to the RP for actions taken in good faith. That's different. Okay, whether the RP can be proceeded against under the penal provisions, even though the RP was unable to actually do that because there is no money. If there is no money, you can't be hanged for that. Okay, RP is an officer of the court, those things. So other than that, to discharge the functions in normal course, it will be the RP who will be considered as the employer.
Yeah, I understand. But now the law says that to the residual value, I mean dues, the attachment of the properties of employer also can be done. So to my mind,
will that affect it? No, I would say no,
yeah,
because that is
previous dues.
Yeah,
Exactly. Yeah.
Even current dues for that matter. See, it is possible that you are actually incurring current dues and you are unable to pay because there are no cash flows. Does it mean your property will get attached? No.
Yeah, I got an answer. Yeah.
Even if you look at the history of implementation of PF Act in India, except rare instances, personal property has never been attached. Yes. And in those instances also, there were usually either proprietary or partnership firms.
Right. Yes, thank you.
Okay, now priority of contribution, and this is what
Raviji, I think let's shift that here. And let's just to flip aside, that you are saying that RP is an employer. Now attachment of that means a promoter's property also cannot be possible because that during the that attachment date he is no more an employer because there cannot be two employers in same place.
No, I thought I answered that when Rekha asked it. I said while the provision is
I'm
there,
saying that the moment you say that RP is an employer, if we conclude that, to keep that stand, that then, that
Whose
PFI.
property will get attached? Why are we as IPs even concerned with it?
No, I'm just saying that, my question comes back to the employer point of view. If the provident fund, many cases attaching a property of the promoter, then, in the same time, that there cannot be two employers.
So when you say promoter, be careful. Are you talking of, establishments which are partnerships?
No, I'm talking about, okay, erstwhile directors. Let's put it like erstwhile directors.
Yeah, even if they are erstwhile directors, you are talking of personal property being attached. Yeah,
Yes.
personal property attachment comes after a very long process. It is not the first action. It is usually the last action.
During the during the liquidation or the CIRP proceedings, also many cases we have seen that that it is happening.
It can happen.
My question is not that that as you rightly said, that I'm not that those areas I'm not concerned, but my concern is that that come to a logical conclusion. Employer, you are saying that it is RP is an employer. Okay. There are some that protection for an RP, his property cannot be attached. But when a property is attached, promoter's property, promoters means, the erstwhile directors I mean by, and I know that erstwhile promoters property is attached. That means his promoters, that the employer's property has to be attached, right?
Okay. I got you're going down, but I got what you wanted to say. Okay. Liability under penal laws has to be construed very strictly. Okay. It would include who was in charge at the time the offense happened. Not now, but when it happened. And whether they fit into that in the sense that not only, see, let's say, if these are professional directors, for example, who are no longer there or still there but suspended. Okay, they are not promoter directors. Then would it happen? These are things which are specific to each case and circumstance. No law can write it down what will be. It is the court concerned which will decide at that time whether it is valid or not valid. Okay. As far as we have to look at what, we couldn't care less whose property is attached as long as our property is not attached. No, why are we bothered? So let's not get into trying to do a PhD on what are the possibilities of PF law and how it can be used. Let's limit ourselves to looking at as IRP, RP liquidator. What are the things that we need to know and what are the things that we need to be careful about? Okay. So RP as an employer under the PF Act, the answer is yes, but to a limited extent. Those provisions which deal with past offenses or defaults or whatever, obviously RP is never even considered to be responsible for that. A person who is not responsible for an act cannot be punished for that, no? Simple law of natural justice. So that will apply. So when you say that once RP has taken charge and some default has happened during that period, which could have been prevented or was overlooked because of the action or inaction of the RP, then RP is responsible only for whatever you do or don't do. So the good faith law will apply. And it applies everywhere, not just for RP, for everybody.
Ravi, I'll just extend my point here. We are talking about RP is to be considered as an employer during the CIRP process. However, when it is a liquidation process, how it is being looked at in two scenarios.
Liquidation, interesting question. Yeah. Yes.
In two scenarios where, just a minute. In two scenarios where the company is going concern, and secondly, where the COC has decided not to sell that as a going concern. So from day one, it's just a liquidation of assets. So how does we look at?
Okay, again, tricky. Okay, like any other, every law will not lay down everything, but let's try to interpret it logically. Once a liquidation order is made, which means that it is stated as a notice of discharge for all the employees, workmen, directors, everyone. Okay.
Yes.
So notice of discharge is there, which means now the court has said the existence of this company will come to an end. Now all that remains is the process. Get rid of the assets. In such a case, what would be? Of course, if it is not a going concern, there are no employees. If no activity is taking place, selling as a going concern doesn't mean activity is still taken. Okay. So you could sell as a going concern without the employees. You could sell it with the employees. So it depends. So that's why it's very specific to each situation. Majority of cases, if we look at, there's a large number of, first of all, sale as a going concern, I think 3 or 4 or maybe a half a dozen, not more. But in majority of cases, what will happen, even under sale as a going concern, so-called going concern, there may not be employees as such available also. Many places they are not. And so what goes is the company, maybe its brand, maybe its intellectual property, definitely its assets, maybe certain licenses, etc., etc. Employees may or may not be. But in the rare case where it's a functioning company with employees already there, maybe a factory which is working, and then it goes, what happens to that? During that period, when you are running it as a liquidator, now you are responsible for every cost because they are priority cost anyway. The cost of running the establishment during liquidation is liquidation process cost. Automatically, it has to be paid in priority. Similarly, yes, during CRP, again, it has to be paid in priority. So these issues of who is responsible will not come so much because the RP or the liquidator is anyway responsible for making that payment provided the cash flow is there. If not, then it is to be paid first from the sale of the asset or the resolution. So yes, to that extent, it is not in conflict. Okay, so whether the RP liquidator is called an employer or not does not matter because as a liquidator, anyway, that liquidation process cost has to be paid in prior.
Yes, absolutely. Agree. Yes, thank you.
Yeah. Hello. Yeah. During liquidation, the company is under liquidation and workmen and employees, they are filing their claim to the PF department to withdraw their money in the PF balance. Okay. So what is happening? They are saying to the workmen to get their claim form verified from the liquidator. Is liquidator duty bound to verify these claims in the want of limited information?
Okay. You will have to go back to the procedure for withdrawal of contribution or amount accumulated from the Provident Fund. Now, there are very specific instances and also there is a procedure of how to go about it. There is a non-refundable advance, there is refundable advance under PF. Okay. Refundable is that which you have to repay. It's like a loan. And there is non-refundable, you take it away and you don't have to repay because ultimately both are your money.
Yes, yeah.
Okay. So during liquidation or during CRP, doesn't matter. An employee wants to withdraw some money.
Yes.
Either of the category. The form has to be verified by the employer. Even then.
Yes, yes.
And who is the employer?
Yes.
RP or liquidator. So only to that limited extent, you are verifying that the numbers are okay. And the employee is still existing with you as an employee. That is the first certification. When you sign a form, basically you are saying he's still my employee. Means employee of this establishment. Because that the PF department doesn't know. People leave, go away somewhere and then still say that I'm still there. Okay. They can. A person who has resigned can also apply to take out his money from his. But again, there are certain rules and procedures. Provident Fund withdrawal is not very easy because it is the intent behind it is that 1, it shall be available to the employee after retirement. 2, it shall be available to the family of the employee. That's why it is difficult to take out money.
Hello, Raviji, Himanshu here. Can I ask one question?
Yes.
Yeah, with reference to what Rekhaji said, according to me, when the liquidation order passes, in that case, all the employees stand discharged. So even if any...
Sorry. Wrong understanding. Notice of discharge. You see the words. In the Act, it is notice of discharge.
Okay,
so
notice of discharge.
Whatever is the notice period has to be followed.
Okay. I have observed that in one of the cases, the RP, what he did, that he has discharged all the employees but to whomsoever he feels that it is necessary, he has employed them on contract basis, and thereby there is no liability arises at a time of liquidation. So there is a question of who is liable to pay the PF dues during the time of liquidation when the organization is a going concern. It will not arise, according to me.
No, this is a method out. Okay, this is creative interpretation of the various provisions to find a way which is not illegal. And it's perfectly right. There is nothing wrong with it. Absolutely, there's nothing wrong. You can terminate it because the court order gives you the power to discharge the employees as per rule. Rule means whatever contract of employment or the provisions of Industrial Dispute Act, whatever is applicable, either one of them. So according to that, you can discharge the employee and re-employ only those whom you want for the limited purpose. Perfectly okay. Nothing wrong with it.
Yeah, this is basically a strategy.
Right.
And the right strategy to adopt. Not doing it would show, incompetence actually. Because why are you keeping the meter running? You want 10 people out of 100. Why are you carrying the burden of 9?
Right.
Makes no sense. So but follow the law, whatever is the terms of notice. So if somebody has a notice period of 3 months, then that either give that period to serve out or notice pay and lieu thereof. Either, whatever the loss is.
Right.
Okay, priority of contributions, contribution payable to the fund. Okay, and this is talking of insolvency, the situation of insolvency, where the employer is adjudicated insolvent, which means if the individual, in case of a partnership firm or a proprietary firm, or being a company, order of winding up. It has not mentioned CIRP, but one has to read that creatively. I think the Supreme Court judgment of yesterday, is it, or day before, which said IBC provisions have to be read in the context of their objectives. Okay. So similarly here too. So in an insolvency case, the contribution payable to the fund, damages under 14B. Okay. Now these damages are what is levied as a penalty. When we come to 14B, we will see that word penalty. Any charges payable under any of the provisions, etc. Where the liability has accrued before the order of adjudication, which means as on CRP date or liquidation commencement. Now, one thing we have to remember that most laws provide for winding up or liquidation, not CRP, because CRP is a stopgap animal which has been created only for the purpose of IBC, more like under administration, a last chance. It is not, there are so many provisions where CRP effectively works like a scheme under liquidation, but really speaking, it is only to give a chance to revive a restructuring exercise under court supervision, third-party administration, etc. But otherwise, it's only restructuring. Whereas liquidation, winding up, and all that, which means they enter finality, and that is when the order of payment, ranking of payment, all that comes into play. In the way a lawmaker would think in restructuring everybody will get paid. It doesn't happen, but that is what would be an assumption when they make so. That's why section 53 is under the liquidation part of the chapter and not under CIRP. And they had to actually make an amendment to section 30 to link the two at a later stage, which was not there earlier. So where the liability is accrued before the order of adjudication in this deemed to be included among the debts which to be paid in priority to all other debts. Now, this is the words. When we come to case law, we will see that this is what the judiciary, not just under IBC. IBC is relatively new, 5-6 years, but the issues have come up under Winding Up in Companies Act many times. And again and again and again, they have said paid in priority to all other means that and nothing more. No in between to be linked. It is above everything else. And why is it above everything else? Social security. Okay. That's the reason behind it. Because let's look at it this way, that party A owes money to 20 people, 20 types of people. And the law says that under certain situation, this is the way ranking will be. But that is an extreme situation. If the insolvency or winding up is not there, what does the law say? Everybody has to be paid in full. Everybody's right is equal, right? So that is one set of rules. The other is that when you make a under law, whatever statute, a list is made up, a ranking is made up, order of priority, waterfall mechanism, whatever you call. At each stage, there is a logic behind it. It's a logic which may not be acceptable to the one below. Like if I am number 5, my debt, I will not really be happy that, oh, you know, I'm somebody else deserved to be before me. No, I want my money, right? Everyone in that A to F will feel that they need to get their money upfront and in full. But when there is a shortage, what to do? That is when the law steps in. It tries to make the best out of a bad situation, nothing more. That's how we have to understand ranking and priority. It is not God-given. It is not just. It is just the way of trying to have a compromise within the principles under which the country functions. Now, that's why these rankings and the calculations which are there under the 53 or equivalent in any other country, they may differ from country to country. There may be up and down depending on the socio-economic situation of each country and the type of government and philosophies that they follow. So they are not, these rules have not been made up there. They are all man-made and they have to be looked at that way. That they are prone to mistakes. They may not take into account all possible situations where the implementation might become unfair. And that is when one has to apply our mind. Okay, where due from an employer in respect of the employees, which means deducted from the wages of the employee. That means not all dues, but that which has already been deducted or the employer's contribution is due. Okay. Then it is deemed to be first charge on the assets of the establishment. Now comes that question which was asked. First charge ye bhi hai, first charge wo bhi hai. Everybody says I am first charge. Then how do you decide which is first, which is above, which is within first, first among equals, first mein first, all are first, but sabse pehla kaun? Not an easy job. Okay. There are certain principles laid down, but case law is where it will help us, and that we will cover in the next session as to how this first is decided, who is first and who is above. But broadly, very, very broadly, there will be situations where the same interpretation will not apply. That charges are created in two ways. Any charge, either by operation of law or by act of parties. In general is operation of law is usually above act of parties. So when security interest is created, for example, in favor of a lender by way of a mortgage, deposit of title deeds, whatever type, okay. And then there is another charge created by operation of law. Let's say, if we give the example of Maharashtra property tax, for example, or GST, even GST. Now, these dues have an automatic first charge on the assets. So which one will be higher? In general, that which is by operation of law will be higher than that which is by operation of parties. Why? Again, very simple. This is in rem, which means it is dealing with public interest. The operation of law generally deals with matters of public interest, and act of parties is generally private interest. So in rem higher than in person. General principle, but not always true. Now, as far as the lender's charge is concerned, and it started with SARFAESI, and prior to that RDDB, but SARFAESI, and continues in IBC, that secured creditors have been given higher charge by, again, an operation of law. because specific provision was made. If that provision had not been there, they would rank much lower than crown debts, because those debts usually have first charge by operation of law. Okay, so this is broadly, but with specific exemptions. Those exceptions have to be explicit. They have to be in express terms in a particular statute. They cannot be implied. Okay, 14AB, certain offenses to be cognizable. Now, this is a very dangerous provision, because under CRPC, a cognizable offense means where a police officer can arrest a person without a warrant. That is the meaning of that. And this is there, this provision is there in the Act. And okay, again, rarely used. If at all they have used it, it's only been against, highly defaulting promoters, etc. But the fact is, it is there, and we need to know that it is there. Okay, 14B. This is the one which is about damages. So I talked of 4 types of dues: employer's contribution, employee contribution to the extent deducted, then interest under section 7Q. Now 14B is damages. Damages is a penalty. Clear. I mean, the words are used there in the section itself, that recover from the employer by way of penalty such damages which shall not exceed so and so as given in the scheme. How much amount and all that, really speaking, secondary. It's there in the scheme. Maximum it can go to is equal to what is the principal amount due. Now, when it is said damages, the question will come under 53, where does it fall? Now, elsewhere, the section 11 says that everything under PF Act which is due is above everything else. Now, that obviously includes damages. So it means that even damages need to be paid before even we talk of secured creditors or other dues, etc. So think about it. We will discuss it in the next session. Or does it have a different meaning because of certain provisions of IBC which allow it to have a different meaning?
Ravi, to my mind, it doesn't fall under the supercharge. Because the priority, the supercharge is given only for the reason why the PF fund is considered to be a social security.
No, let us look at then section 11 again. Why I said though, see the wording is, it covers damages. If you look at 11(1)(a), damages under 14B specifically mentioned under 11 that it shall be paid in priority. Now, when we are talking here, that will it be? Why I'm saying, because see, by itself it is super priority. There is no doubt about it by itself. But which other provision of IBC may lead to a different interpretation for 14B claim? Okay, we will discuss it in the next session, but I'm just putting that question across. Maybe there is something in IBC which can lead us to a different interpretation. We have to back up our own interpretation. Na? We can't say ki mujhe lagta hai. That will not wash. It will have to be, how do you negate the provision of section 11? Is there something else which can lead to a different interpretation? So we will look at that. So that part is the priority part. But now this is the proviso is important. Now the central board has the power to waive, reduce or waive the damages.
Sir, may I ask a question?
Yes, please, go ahead. Sorry. I saw your hand, but I forgot. Sorry, Goli.
Sir, I'm Armo from Chennai.
Yes.
There's one small case law. The company is under CRP in March 2019. And it was admitted on liquidation in November 2019. EPF has filed a claim in March during the CRP period. And liquidation period also it has submitted subsequently. But what happened is the section 7A proceedings was conducted the period for which they were claiming is from 2014 onwards. Some of the employees. And Section 7 proceedings was conducted only in 2020. After the liquidation, during the liquidation period. I made an application in NCLT. NCLT has rejected my application. There's 2 or 3 points I want to clarify. One is what is the periodicity of payment? Because the company does not have any cash balance, anything. I have to take it from only the that is secured assets. From the secured creditors only I have to collect it. First point. Number 2 is the period is very old one. So I am not sure whether the employees, the whatever contribution we are going to make to the EPF will reach to the concerned employees. Because some of the employees, I came to understand they are not enrolled at all as a EPF member at all. So there is a one kinch is there. Then the next question comes. In case if they are not go to the real member, in normal EPF Act, what will do it? Whenever any unclaimed amount will go to the separate unclaimed account. After 3 years, it will be transferred to the government account, which is against the Section 53 of IBC. Then the periodicity of EPF payment, whether it is coming before even CRP costs and liquidation costs and secured creditors, or it is afterwards. Whether any possibility of appeal.
Okay. Many issues you have raised, but let me start one by one. Okay. Whenever we are dealing with issues as IPs, okay, which means as IRP, RP or liquidator, we are dealing with matters relating to employees of any sort, or let us say smaller creditors, trade creditors, operational creditors. What is the right thing to do when the law is not explicit or very clear? What I have found this helps is put yourself in that person's place. Now, if you are an employee whose dues are there, what would be your stand? What would be right in your opinion? Okay, obviously you will say every single pie of mine has to be paid. So to that extent, I mean, that is true for everybody. Then what is the law when the law has changed it to put workmen, for example, at par with secured creditors, right? 1A, both are pari passu, at par in terms of the amount of claim. Why has they done so? In normal course, a workman is an operational creditor, would rank much lower. Why has it been put up? That is by deliberate decision, right? If you go through the Joint Committee of Parliament thing, when the draft bill came, what was recommended, I think, if I remember rightly, was 4 months. But they made it to 2 years. Because they have recognized, as I said right in the beginning, the ranking and priority is man-made. Section 53 or its equivalent is made by people. Relevant maybe at one point of time, may not be relevant at a different point of time. Now, in a country with a very great social security system, like for example, UK, if you look at the UK law, for example, certain employee dues are paid by the government because they have established a separate fund, the Secretary of State funds or something they call that. And the employee takes money from there in an insolvency case, and that fund then raises a claim on the establishment. Okay, so it's different. That means somebody else is paying, they may or may not recover all of it. It's like an insurance. Okay, now that depends on that country. In India, we do not have that yet. We are far away from being a real welfare state. So these priorities are given that, okay, till the state can take care of it, at least let us give them higher priority. Now coming to when is this Section 7 proceeding done or not? So let me ask a question. Anybody can answer this. That if you own a property which needs to be managed and or certain business, let us say, and you are not present to do so yourself, you appoint somebody in a position of trust as a trustee. You take care of this, including collecting. Let us say you have to collect the rent, for example. You own large properties where rents are due monthly basis. Now, if the trustee or the person who is not supposed to collect it does not do in time, does it take away the right of the owner to collect the rent? In a similar situation, the EPFO, the Provident Fund Commissioner, or whatever name you call them, they are trustees, right? Because it's a trust. It's by definition a trust. They are trustee for the beneficiary. And the beneficiaries are the members of the fund. So the members' right, can it be taken away because the trustee has not done their job in time or done badly? The usual answer would be no, right? No court will ever accept just because the trustee didn't do the job, the claim of the beneficiary would be negated. Similar would be the situation under PF. Whether the PF department initiates a proceeding under Section 7, does anything about it, does not do anything about it. In my opinion, the claim or the right of the employee towards whatever under the act, whatever is available, does not get negated at all, irrespective of that. Okay, all we will see in case law that the judiciary has not always followed this principle. Okay, sometimes it may be that situation facts may be different and may not be applicable, but to take some observation or something out of context and try to apply it elsewhere would be stretching the logic too far. So that, and what else was your question? Last one.
Whether it is limited to, because our Section 53 says limited to 1 year or 2 years.
No, see,
now it is
Provident
for more
Fund,
than 5
okay,
years.
Provident Fund gratuity have been specifically said to be beyond 53. That means over and above 53. Is it over and above CIRP cost? The jury is still out on that, but the general rule among all administrations throughout the world, all regimes, the CIRP cost is super priority. I mean, nothing is above CIRP cost or cost of administration or insolvency, whatever. That comes first. And then come the priority payments. And in this case, it would be PF. Then would come 1A, then 1B, 1C, 1C, like that. Okay. So secured creditor. See, secured creditor came up to 1A by an decision of the Parliament. Otherwise, they are not. Okay. When you are talking of secured creditors who are secured by act of parties, by creation of charge on the assets by the company or other. Because secured, those creditors whose dues were secured by operation of law generally enjoyed a higher rank. Whether they continue to do so under 53, again, we will check, because there is another, as I said, one more provision which you need to read to resolve the conflict between two things which apparently look right. Both of them look right. Okay. So we will come to that later. Yeah. So I'm coming to the important provision of 14B, that 14B itself includes the provision for a reduction or waiver. And specifically in terms of scheme sanctioned by BIFR. Okay. Purposive interpretation, scheme of BIFR would be similar to a scheme under resolution plan. In my opinion, you can take that argument and it will be accepted because it is the extension of the same. I'm going back a little. This is section 2F. Just I wanted to put it at the end that there are certain employees who are treated as excluded. And this is in line with the why it is called a social security legislation. People drawing 15,000 or more than 15,000 are not mandatorily covered under the PF scheme. Okay, they can be covered by the employer if they want to, but the employer can say, no, I don't want to. Or the employee might say, okay, don't cover me. It's okay, give me so much extra in my take-home pay, whatever. That's between them. There are senior level employees who join on contractual terms like managing director, CFO, etc., who decide that they shall not be covered under PF. Their contract itself says so, and that is perfectly valid. That's allowed. So this also tells you that 15,000 and below is the mandatory limit, which means it is a welfare legislation to take care of those who are in the weaker sections of society. How is contribution to be paid? Now, section 30 says that the employer shall, okay, mandatory, in the first instance, pay both the contribution payable by himself, employer's contribution, also on behalf of the employee, employed directly or indirectly, which means it covers the contract labor. Okay, so the principal employer is responsible to pay both these contributions as soon as they fall due.
Yeah.
31, not important. Employer share cannot be recovered from the member. Nothing great. Now, how is the member's contribution to be recovered? Now, read 30. 30 says that the employer shall pay the member's contribution as soon as it falls due, which means as soon as the wages fall due, the month succeeding that 15th of the month. The rules are there in the PF scheme as to when the payment becomes due. So, whether you have paid wages or not, the PF has become due on so and so date. That means the employer is required to pay that. But when can the employer deduct from the employee? Only when the wages of that particular month are being paid. Which means suppose the wages are in arrears, for example. And let's say after 4 months of not being paid, now 2 months wages are being paid today, the employer can deduct only 2 months contribution and not 4 months. Even though he might have actually paid those 4 months contribution. Sometimes they don't do, that's different, but that is what the law is. So this is accrual basis due. Now this is what is been used in many judgments, directly and indirectly, that this provision 31(3), is it 32(3), 32(3), I think. Yeah, section 32, subsection 3. Any sum deducted, now the word deducted is used here, by an employer or the contractor, etc., shall be deemed to have been entrusted to him. Him means the employer, for the purpose of paying the contribution, in respect of which it was deducted. That means this, the moment a deduction is made, whether deposited in the PF account or not, is a money lying in trust. Now, this is what has been picked up in many of the judgments which said that these monies are also actually fund. Fund here means that which to which the credit has become due and has been entrusted to the employer. Okay, now these are provisions under the scheme, not under the act. So a little more detail is coming here. I'm not getting into what would be the damages, etc. Those are numbers which are there. The formula is there. So 32B is again important for us as IPs, whether as IRP, RP or whatever, as also when we have to advise the COC or the resolution applicant, or even as in a role as an advisor to a resolution applicant, that the act provides a certain method for reduction or waiver of damages, in addition to whatever is there under 50. Okay, in cases where that may not be. So when can you ask for a reduction or waiver? In case of change of management. Now this is actually very significant. It's rarely that government will give you such what do you call leeway, but change of management also can trigger a request for reduction or waiver of damages. That past management did it and I'm not responsible, etc. Merger or amalgamation of sick company, well, CRP, complete waiver is allowed. And in a scheme of BIFR, 100% waiver. Yes. Okay, so that completes the PF Act. We will come to gratuity now. Any questions?
Regarding damages.
Mr. Arumugam first, Rekha, 1 second. Hold. Arumugam.
Shall I call?
Mr. Arumugam, go ahead.
Regarding damages, whether after the judgment of NCLT, whether I can make an application to EPF for a waiver of the damage under section 32B?
Whether you need to do that at all. First of all, you means, are you talking as an IP?
Yes, EPF, they are having including damages from the year 2014 onwards, not from the date of their section 7.
First of all, you are just an administrator.
Yes.
You have no right to seek any waivers, exemptions, etc. because you are supposed to follow the law, and the law says pay the damage. The people who have the right to seek it is the new management. Okay, so it has to come via the resolution plan. You can't apply for any waiver of damages. Huh?
It is under liquidation. It's not under
no, under liquidation, section 53. That's a different thing. Okay. So in section 53, how will it operate? Will it be there up? Will it be below? Is there any provision? I told you, no, we will discuss that separately. Whether there is any provision in IBC which allows you to resolve this apparent conflict of section 14B. Okay.
So the real problem is,
sir, we are going to discuss it on 9th. Mr. Arumugam, this issue we will discuss on 9th. That's what I'm saying. Okay. Mark it for that time. We will come back. Definitely. Because it's very important.
Thank you.
Rekha ji.
Yeah. We talked about that in the resolution plan, the resolution applicant may seek for a waiver for damages in case there is a change in the management. Now, what in case if the promoter submits the plan and there is no change in the management? I don't think so. In that case, he can seek
no,
for
in
a
that,
waiver.
you see, there are two options. First one is talking of change in management or merger or amalgamation of the sick company with another company. That's proviso A, right? One situation where you can seek for waiver of damages. Situation B is talking of a scheme of BIFR. Now, scheme of BIFR in olden days never involved change of management. It always used to be current management only. Okay. So the same logic can be extended that a scheme of BIFR is replaced by a scheme under IBC.
Okay, got it.
Okay. Now, gratuity. Well, what is gratuity? The name itself tells you provident fund. It provides for what? For, situations, post-retirement life, family, after the earning member has become incapable of earning, whatever. So it is a fund to provide for. Gratuity by itself is a thank you payment. Okay. Gratuity, gratuitous payment. It is where the employer is thanking the employee for certain amount of service by way of a payment. It used to be, when it started off, purely discretionary, and then over a period of time, it has become embedded in laws across various nations. They call them by different names. In India, we call it gratuity. From the times, I think gratuity was first started in India probably by Tata Steel before independence. And many of the provisions which the Tatas brought in became laws later on. So this is one of them. So gratuity, under the payment of gratuity Act, is payable for a minimum period of service. That's 5 years. And when does that become payable? On the termination of the employment. Termination by way of superannuation, retirement. Why superannuation and retirement are different, I don't know. Don't ask me. In my opinion, they both mean the same thing, but whatever. Or resignation, or death or disablement. Now, in the case of death or disablement, the 5-year period is waived. That gratuity becomes payable, even though 5 years have not been completed. Now, the maximum amount of gratuity payable, there is a cap. by way of the government is empowered to tell this is what the maximum you can pay. That does not mean the employer cannot pay, because then, the next provision talks of nothing shall affect the right of an employee to receive better terms under an award. An award means an industrial award, usually covering workmen, but not necessarily workmen. It could even cover sectoral employees like bank employees, etc. Sometimes they also do get awards. And the whole sector, there is a common award by an industrial tribunal, which might cover other than workmen. So either by contract between terms of employment or by way of an award or agreement with the employer, if that gives better terms, then that will prevail over the maximum which the government has given. Of course, these are an impact, I think, as far as tax law is concerned, where they allow you exemption only to the maximum amount which is covered under the maximum notified by the central government. 10 lakhs, if I remember rightly. Now, unlike PF, which cannot be touched for anything whatsoever, PF money once due is that of the employee or of the employee's family. But gratuity is not like that. Gratuity can be forfeited. Gratuity can be stopped. It can be wholly or partially forfeited for certain specific instances, obviously, where the employee concerned has his acts have led to certain damage, negligence, etc., of the property or assets of the employer, or there are acts of moral turpitude and something which are heinous offenses. The employer may withhold the gratuity. Obviously, when the employee goes to court against that, more often than not, the court will rule in favor of the employee and say, pay karo, except in very rare cases. But just that this provision is there means that the both are not on the same footing. Provident fund is like up there and gratuity is below that. The Gratuity Act actually covers up by saying, protects the contributions by saying that there should be compulsory insurance. Unfortunately, the Act has left it to the state governments to notify when and to whom compulsory insurance shall be applicable. And most state governments have not done so. So whoever has taken gratuity insurance from LIC, the gratuity scheme, such employers are those who have done on their own, or maybe because of an agreement with the employees or an award of the union, but not because it is compulsory. Determination of amount of gratuity, this is again similar to there. If there is a dispute, then whatever the employer thinks is payable should be deposited with the controlling authority, and then let the dispute take place from there. Similar to PF Act, the inquiry officer here under the Gratuity Act will have the same authority like a civil court, which means that they can compel the presence of a witness who is required to assist them in the proceeding. And it is deemed to be a proceeding under section 196 of the IBC. Okay, so that is a penal code. Recovery of gratuity here is slightly different from PF. Here it is as arrears of land revenue, which is way below the powers that a PF recovery officer has, because there straight away they can issue attachment order. Here there is no attachment order. There is a certificate of recovery. It has to be sent to the collector. Then the collector has to initiate proceedings to collect it as arrears of land revenue as per the provisions of those acts. So to that extent, again, even in terms of enforcement, gratuity is much lower than PF. But when it comes to penalties, it seems that it is much higher. In fact, very specific, that the monetary penalty is there, but there is imprisonment, 6 months, 3 months, 1 year, 2 years. So these are again, section 9 of the Gratuity Act also, one needs to be aware of, careful, and make sure that there is no default which is willful. Gratuity amount similarly protected, again similar to PF, that it is not liable to be attached by any civil, revenue or criminal code, but it can be forfeited by the employer. We have already seen. And yes, section 14, actually I deliberately included here just to tell or to reiterate that section 238 is not the first non-obstante clause. Almost every act over the last 50-60 years has a clause which is similar, that this will override everything else. And that is why interpretation comes into play. So that finishes today's session. And we can have any questions now which are left over. Yes, Mr. Rajesh Shet.
Yeah. Good evening, sir. Your session was very good, but I have one small question. In the CRP which I am handling, few people have resigned or under superannuation before CRP commence, and few people after CRP has commenced. So I have two sets of people, one who have resigned or superannuation before CRP commencement date. They have filed the claims also for provident fund and gratuity and all other payable, as well as those who have retired during CRP period. So whether I can pay and the company has sufficient balance at the credit in the gratuity account also and for provident fund. So can I pay them during the CRP?
Okay, first, before I answer the question, let me ask you this. When you say provident fund account, is yours an exempted fund?
No.
Then how do you have money in your account? It
No,
will be there with the government.
I was referring to only gratuity, sir. I correct myself.
You said provident fund. Okay. Now coming to gratuity. When you are saying fund in the gratuity account, what gratuity fund do you have? The LIC?
Actually managed by LIC. So
LIC. Okay. That's right. I wanted to understand. Now, go through the documents of that fund very carefully. That not a single rupee of that belongs to the employer.
Correct.
It is a separate account maintained in trust. The employer has the rights under the scheme to nominate the trustees. But that doesn't mean that the amount in that fund does not appear in the balance sheet of the company. Never. Okay. So it's not your asset. Now you have nothing to do with payment. All you have as a RP, similar question somebody else asked, that if somebody wants to withdraw, there is a form there also. Similarly, LIC has a form which has to be filled up, and the employer only verifies the details. The money is already theirs. So there is no question of discretion here. You have to sign it. As long as you are in a position to verify details. That means whatever is required, basically the basic details which are there, because whatever is contribution, see the LIC fund operates slightly in a way that only that money which is paid gets credited. To that extent, the employee will be paid by LIC directly. It is not even, they may send the check to the registered office of the company, but it will be in the name of that employee. Okay. So the RP has no role except to do verification.
So that your answer towards gratuity, sir, right?
Yeah. See, provident fund, you can't be having the money.
Yes.
Again, so in both cases, you don't have it. One is held by LIC, another is held by the Regional Provident Fund Commission. In both cases, all that you as an RP has to do is verify the details in the form for withdrawal. You're not giving the money. You're only verifying details.
Okay.
So no law is broken when you verify. You're just certifying these details are okay.
So these applicable to both pre-CRP and during CRP.
Yeah, it's not your money.
Correct, sir. Correct.
So you have
Just
no
for
custody
sake of
and
my
control over it
clarity,
anyway.
Just for sake of my clarity, I am asking.
ID verify कर रहे हैं, so obviously you can do that anytime.
Right, sir. Right. Your answer is very clear. Thank you.
Welcome. Yes. Yeah, Mr.
Hello.
Aramo.
Yes, sir. Sir, regarding the same thing, NCLAT has given one order some time back that if there is
Mr.
no
Arumugam, before I proceed, one second. If you are asking very case specific information, please talk to me separately and I will charge you a fee for that. Ask only general question.
No,
And
sir, general question only.
no,
General
no,
question
as far as this. One second.
Payable.
One second. Hello, Mr. Arumugam, please listen.
Yes.
Today we will concentrate on understanding the provisions
Okay,
of
sir.
law that we have covered.
Okay.
And the interplay with IBC we are going to cover in the next session. Okay. Yes. Anything else? Okay. If there are no more questions, we will wrap up for the day. We have more or less been within schedule. Okay. Right. Okay. Thank you all very much. Okay.
Thank you, sir.
That's for the day. And on 9th, when we have the next session, you can come with as many questions as you want to. There is no guarantee from my side that I have the answers, but I will make an attempt.
Thank you so much, sir, for your time, sir.
Sure. Bye bye. See you.